What's going on, everyone? Are you looking at investing in long-term passive income? Today we're diving into a topic that's close to my heart and my wallet. Now, if you're looking to build long-term wealth and you're not spending hours researching individual stocks, you're in the right place. ETFs are like the diversified all-stars of the investing world. They let you buy a basket of stocks with just one purchase, which is perfect for us busy investors. And you know me, I'm all about that passive income, and ETFs are the key. We're going to be talking about 3 specific growth ETFs that I think are absolute gems. These bad boys have the potential to outperform the market and really take your portfolio to the next level. But before we get into the good stuff, make sure you smash that like button and subscribe to the channel if you haven't already. It helps the channel grow and it lets the YouTube algorithm know that you're serious about building wealth. Alright, let's kick things off with our first contender, the Schwab US Large Cap Growth ETF, ticker symbol SEHG. Now this ETF is like the reliable workhorse of your portfolio. It invests in 231 large cap stocks. Think big, established companies that have a proven track record of growth. And get this, almost half of the fund is invested in the tech sector. Now, I know what you're thinking. Tech can be volatile, and you're right, it can be a bit of a roller coaster ride, but remember, volatility works both ways. When tech soars, it really soars. And over the long term, tech has historically been a massive winner. This ETF has a history of beating the market. Over the past 10 years, it's earned an average annual return of 16.48%. That's insane, especially when you compare it to the market's average return of around 10% per year. And here's the cherry on top. The expense ratio for this ETF is a measly 0.04%. That means you'll pay just $4 in fees for every $10,000 you invest. That's practically nothing. And trust me, those low fees add up over time, leaving you with more money in your pocket. So if you're looking for a solid low-cost ETF that gives you exposure to some of the biggest growth companies in the US, the Schwab US Large Cap Growth ETF is definitely worth checking out. Now, for our next pick, let's talk about the Vanguard Mega Cap Growth ETF, or MGK for short. This ETF is all about going big, and I mean really big. It invests in 71 of the largest companies in the world, also known as mega cap stocks. We're talking companies with market caps of at least $200 billion. That's billion with a B. To put that into perspective, a large cap stock typically has a market cap of at least $10 billion. So yeah, these are the heavy hitters of the stock market. Now, some of you might be thinking, Graham, isn't it riskier to invest in such massive companies? And the answer is, not necessarily. Actually, mega cap stocks tend to be more stable than smaller companies. They're like the battleships of the stock market, not going anywhere anytime soon. But of course, there's always some level of risk with any investment, and with this ETF, you're not getting as much diversification as you would with a broader large cap fund. That's because you're only invested in a smaller number of companies, all of which are concentrated in the mega cap space. But don't let that scare you away. Over the past 10 years, the Vanguard Mega Cap Growth ETF has earned an average annual return of 16.35%. That's right, even these massive companies are still capable of delivering impressive returns. So, if you're looking for a way to invest in the biggest and most established companies in the world, the Vanguard Mega Cap Growth ETF is definitely worth considering. Alright, let's wrap things up with our final pick, the Vanguard Information Technology ETF, or VGT. Now this ETF is not for the faint of heart. It's 100% focused on the tech sector, which, as we know, can be a wild ride. But with high risk can come high reward. This ETF holds 317 stocks from all corners of the tech world, but its top holdings are Apple, Nvidia, and Microsoft. And get this, those 3 companies alone make up over 44% of the entire fund. So if you're bullish on tech and you believe these giants are going to continue to dominate, this ETF could be a goldmine. Now, I'm not gonna lie, investing in a sector-specific ETF like this does come with more risk than a diversified fund. If the tech sector takes a hit, this ETF is going to feel it. That's why it's crucial to make sure you're properly diversified if you decide to invest in the VGT. Don't put all your eggs in one basket, you know? But let's talk about the good stuff, the returns. Over the past 10 years, the Vanguard Information Technology ETF has absolutely crushed it, with an average annual return of 20.68%. That's the highest of all 3 ETFs we've discussed today. Of course, past performance isn't always indicative of future results, but this ETF's track record is definitely impressive. So, if you're comfortable with a little more risk and you're looking for exposure to the exciting world of tech, the Vanguard Information Technology ETF might just be your ticket to the moon. So, there you have it. 3 fantastic growth ETFs that have the potential to supercharge your portfolio. Remember, the best ETF for you will depend on your individual goals, risk tolerance, and time horizon. It's important to do your own research, consider your options carefully, and maybe even talk to a financial advisor before making any investment decisions. But hey, no matter what you choose to invest in, the most important thing is to just get started. The sooner you start investing, the sooner you can start building wealth and working towards your financial goals. And who knows, maybe one day, you'll be sipping cappuccinos on your own private island, all thanks to the power of ETFs. And hey, if you enjoyed this video and you're ready to level up your investing game even further, make sure you check out my other videos right here. And as always, don't forget to hit that subscribe button and ring the notification bell so you don't miss out on any future videos. Until next time, happy investing.